Hello everybody. Tim Knight, obviously. Well, I'm being lazy, I guess, because doing these videos is much simpler than typing words and doing screenshots and assembling a post and all that. But it's not out of just sheer laziness. My view is that we're in such a kind of seat of the pants market right now that it's appropriate, I think, to kind of keep a microscope on what's going on and talk about things in not quite real time, but in a very quickly refreshed fashion. And so what I wanted to do is just, and as always, I haven't rehearsed or scripted any of this. This is just completely off the cuff. I don't even know what symbols I'm going to type in. But I just want to kind of talk about the market day that as I'm recording this, just finished up moments ago. As we entered the day, let's just kind of dial it back to sort of when I woke up. What had happened was, the market opened on Sunday, plunged real quick, and then bounced real quick, and just went into this long slide like so. And around midnight, just almost, I'm on the Pacific Coast, so everything I say is in PST. So around midnight, for reasons that I neither know nor care about, we had this explosive move higher, very, very swift, and pushed things way into the green. And then, for reasons that I neither know nor really care about, although it probably had something to do with the British pound's wipeout, we started this tumble. So we fell, tried to recapture, nope, fell, and got back to these lows again. And that was even lower than we saw here. And then we started this climb up. And I woke up around about here, and the market was down about 25 points or so. Things were pretty red, but it definitely didn't seem like a slam dunk to be a down day at all. I was still counting on a rally, as I said in a different post, I think a premium post. I was thinking we might go as high as, say, 3,800. And we started climbing and climbing, and I was watching this level very carefully. And we got there and retreated, and then this time we went whoosh right through it, burst through, and I thought, okay, well now we're cooking. And mind you, I was completely short, losing money, obviously, not too badly, but the portfolio was definitely shrinking in value to some small degree, not long anything. But I wanted a rally, I wanted a counter trend bounce, and that's what we were getting. It didn't last at all. It collapsed as quickly as it appeared. It was a very brief breakout. And the rest of the day, we were just ping-ponging around. We made a new low here. And we're just in a new low and a new low. But we're just kind of banging around like so. And we closed. And interestingly enough, like minutes for the close, we went ripping higher with one final desperate act to rally, and then that lost that too. And so as we look here, we actually managed to get a little bit below this price level. And let me be clear, this price level is not a Fibonacci or anything especially important. I don't mark up my Thinkorswim charts as prolifically as slope charts. For one thing, I'm glad to have it, but it's kind of a broken charting product. The lines move around on their own and so forth. But the only significance of this line was, this was the low from June 16. And as you can see, we have punctured it a couple of times. In fact, as I'm speaking right now, I guess we're a little bit below it, which is pretty extraordinary. Because what has been, for the bears like me, scaring them, and for the bulls, like 99.9999% of everybody else, exciting them, is the fact that we are, quote, oversold, end quote, because we've been falling for weeks. We had a couple of nasty counter-trend rallies, this one in particular. But on the whole, ever since August 16, we've been falling. And the supposition, I suppose, was, okay, fine, we're going to test those year lows. And then as Jason Gopfert said, the bear market's over, which has been already disproved. So, but we are challenging these levels, and it seemed like some semblance of support. And my view is that the bears are in the driver's seat, because there's always the opportunity for a counter-trend rally. But I think look at this. There's a tremendous amount of resistance overhead, just a tremendous amount. Basically, everybody is in a losing position for calendar year 2022. Everybody wants to get the hell out before it gets even worse. And any bounce we get seems to be smack right down, even if it's just a few minutes old. And so I think that prospectively, that Fibonacci level there, which is around 3,800, that's very firm resistance, but we didn't get anywhere even close to it. And what's exciting for me is looking at the bigger picture, just how precipitous the fall could be if we slip below. And see, this is what I'm saying about the product being kind of broken, because this line is anchored to the June low, but we back up to weekly and suddenly there's a lower bar than it, like WTF, people. So the general idea is still the same. Anyway, that we're just kind of teetering there. And on the weekly bar, you can see quite clearly, this is not a bullish looking animal. That now the weekly bar, of course, is a day old, because that's how long the week's been. But this is poised, I think, to really get Rock'em Sock'em Robots going. My target for the year 2022, which I've repeated endlessly, is around 3,500. But as some of the more bearish folks on Slope have stated, I'm being too optimistic. I don't know. I wouldn't spit in the eye of 3,500, but I'm relying. I'm a very bottoms-up investor and trader, and I'm going to rely on my own individual charts, particularly, as opposed to any general conclusions about an index chart in general. Let me just look at a couple other charts, just kind of see what's cooking. I get so deep into this that I don't. Oh my God! Look at gold. What a piece of garbage. How disappointing. How bad was it today? Down another $24. It's already below its own support. I resent gold so much. I really am learning to hate the stuff. I don't have much. It represents a vanishingly small percentage, a tiny, tiny fraction of a percentage of my own worth, but it still bugs the hell out of me. We have in short order fallen from about $2,100 an ounce to about $500 less than that. And there ain't nothing holding this up. It is just a piece of donkey dung, as far as I'm concerned. And I say that as a gold owner. As far as the NASDAQ goes, same story. Extraordinarily dangerous. Teetering, I'll use that word again. Let's extend this a bit. And let's just do a real-time experiment here with these toss charts. Let's go to daily. And let's make sure this is right on the money. All right, like so. Okay, so the low there is 11101.5, which agrees with that. And let's change it to the weekly. And it's still the same value, but this shows a somewhat lower number. So I'm guessing they have some strange adjustment that goes on to make the continuous contract. So I have empathy for imperfections in products. God knows I've created plenty of imperfections of my own, but that's my hunch as to why it gets screwy like that. But the thing is that it looks super juicy from a bear's perspective. Just really delicious. Now if we anchor to that, what happens? See, I'm doing testing with you in real time. Yeah, it doesn't quite cut the mustard. So let's anchor it to the daily as before. All right. Well, anyway, long story short, I will simply tell you that I've never been shorter in my life, and things continue to move along nicely, but I'm always nervously looking behind my back or looking over my shoulder. And I guess I better shut up. That's probably enough. So, you know what? Let's look at the VIX one last time, then I'll say goodbye. Oh wow, we had a nice little increase there. So it's got a tough road ahead of it with respect to that. But you know, if we can get above 36.5, goodness gracious me, that would be very exciting. But one day at a time, right? Okay, now I'll shut up. Thanks for coming by.